In this lesson, we'll treat the wallet as an institutional control layer. Security is only the starting point. The broader goal is to enforce policy, connect custody and payments, support settlement, and keep every movement compliant, auditable, and reconciled. We've already built the foundation: issuance architecture, tokenization, settlement, custody, and key management. Now we move from designing wallets to operating them safely, using policy, compliance, interoperability, and controls that prepare us for the broader risk and regulatory architecture ahead. In an institution, wallet security is more than protecting keys. The wallet is where issuance, transfers, treasury movements, and settlement actually execute. That means controls must govern each step: who initiates a transaction, who approves it, who signs it, and whether it should be broadcast at all. Strong designs combine multi-signature or MPC with policy rules, compliance screening, threat detection, and audit evidence, so risks are managed both before signing and after settlement. Policy-based control adds a decision layer between a transaction request and the wallet's signing keys. The engine checks the initiator, asset, network, counterparty, transaction type, limits, approvals, whitelists, time locks, and compliance rules. Then it makes the decision: approve for signing or reject before risk reaches custody. Because policies are configurable, versioned, and auditable, teams get consistent enforcement instead of ad hoc human judgment. To support that decision, a raw request needs to become a policy-ready record. Capture the asset, destination, value, initiator, counterparty, jurisdiction, and purpose. Then screen it against sanctions, risk, limits, and internal rules. The outcome is not always a simple yes or no. The workflow may approve, reject, escalate, delay, or freeze the request. It also records evidence whether the request came from a user, API, batch, or settlement process. These controls act as practical guardrails around value movement. Withdrawal limits define how much can move by user, role, wallet, asset, or counterparty. Velocity monitoring looks for unusual behavior, such as rapid repeats or sudden volume spikes. Time locks create a pause before high-risk transfers settle. Together, these controls do not stop the business. They create time to review, cancel, or escalate before a mistake or attack becomes irreversible. Whitelisting is more than saving a wallet address. Each destination should be tied to a verified legal entity, beneficial owner, account, and custody relationship. Before approving an address, confirm ownership, screen for sanctions, check investor eligibility, and route the change through an approval workflow. Controls can also vary by asset, jurisdiction, or transaction purpose. Finally, treat address book changes as sensitive events. Log them, monitor them, and require approval, because manipulation can redirect assets quickly. Sensitive wallet operations should not depend on one person's judgment or credentials. Assign clear roles. One person initiates, another reviews, another approves, and specialists handle compliance, treasury, security, or emergency actions. Approval rules should vary by risk, including transaction size, asset type, destination, wallet, and function. For high-risk activity, use maker-checker or multi-party approval. Just as important, restrict admin powers, log privileged actions, require justification, and review access regularly. For regulated assets, transfer approval is not just a signature. The wallet should check eligibility, accreditation, KYC, AML risk, jurisdiction, and sanctions before authorizing the transaction. Some controls can run off-chain in policy systems, while others are enforced on-chain by the token contract. The key design decision is where each rule lives. A strong architecture blocks transfers that are non-compliant, over limits, locked up, or likely to fail smart contract validation. When a suspicious outbound transfer appears, the priority is containment, not debate. A freeze may target one wallet, one asset, a counterparty, or the whole platform. Break glass access should require strong authentication, multi-party approval, and a complete audit trail. From there, the incident team investigates evidence, coordinates with custody, compliance, operations, and smart contract controls, approves remediation, and restores service only when risk is understood and formally accepted. Compliance controls should sit before signing, where they can still prevent movement. They screen addresses and customers against sanctions lists, blockchain analytics, KYC data, jurisdiction rules, and asset-specific restrictions. The compliance layer should return a clear machine-readable decision. Allow, block, hold, escalate, or require enhanced due diligence. It should also preserve evidence, including metadata, results, approver identity, timestamps, and policy version. Once a transaction is signed and broadcast, reversal may be impossible, so this control point has to come first. After approval, wallet security becomes a continuous control loop. Each transaction receives a risk score based on factors such as destination reputation, amount, frequency, user behavior, asset type, geography, and blockchain intelligence. Monitoring compares that score against live patterns and separates routine activity from signals that need attention. The key is prioritization. Reduce false noise, escalate serious cases to the right team, and feed outcomes back into policies, restrictions, due diligence, and incident response. Interoperability turns a wallet from a signing tool into a settlement platform. Fiat funding may enter through banking rails, while token movement occurs through stablecoin contracts and custody infrastructure, with compliance monitoring in the loop. The internal ledger then has to mirror every state: pending, failed, fee-adjusted, and final. A settlement orchestrator ties this together, supporting delivery versus payment, pre-funding, batching, and exceptions, so digital asset transfer and cash settlement stay synchronized and reconcilable. Production wallets need source of truth discipline, not just balances on a screen. The custody API shows policy state, approvals, signing, broadcast, confirmations, and webhooks. The internal ledger separates available, pending, locked, restricted, and settled funds. Reconciliation compares custody records, blockchain data, ledger entries, and bank or stablecoin settlement records. Any break becomes a controlled exception, classified, assigned, aged, escalated, and resolved with evidence. The core lesson is that wallet architecture becomes production-ready only when controls, compliance, and interoperability work together. Policies govern who can move value and when. Compliance checks surround signing and settlement. Integrations connect custody to ledgers, banking rails, and reconciliation. Next, we extend this foundation into regulation, security, and risk.